Have you ever thought, I'd love to own a rental property someday? I hear from my friends it's this thing called mailbox money. And then you immediately talk yourself out of it because you assume investment properties are only for the uber wealthy. And if you get on ChatGPT, Gemini, Google, any of them, they will immediately talk you out of it. The truth is, you don't have to own 10 rental homes to be considered an investor. Everyone has to start somewhere. Sometimes your very first investment property is simply your second home purchase, even your first home, especially if you're buying it with the intent to build wealth. Today, we're going to talk about exactly what an investment property is, who can buy one, and what you need to know before you start shopping. I'm Nikki Rogers with Team Nikki Rogers, powered by Lower Mortgage here in Eastern North Carolina. On this channel, our goal is to break down mortgage topics into simple, easy conversations so that you can understand what we're talking about. If you are thinking about buying property, not just somewhere where you are going to primarily live, but as a tool to create wealth and invest in your future, this video is for you. So what is an investment property? It's exactly what it sounds like. It's a property you purchase with the goal to either make money or build wealth over time. It does not mean that you're becoming a full-time landlord. It could be buying a house to rent long-term, purchasing a condo at the beach to generate rental income, buying a duplex and renting out the other side, or even purchasing a home today that you plan in the future to rent out when you move into your next home. These are all investment strategies, a way to set you up so that you will then become an investor. The most important thing to understand is lenders categorize homes based on how you plan to use them over the next 24 months, not just what type of property they are. Generally speaking, there are three occupancy categories. First one is primary residence. That means that you intend to occupy the property as your primary residence over the next 12 months. Second, home. That means you intend to reside in the property at least 2 weeks of the year. Investment property, a property purchased primarily to generate income. Who can buy one? Here's the good news. Almost anyone that qualifies financially can purchase an investment property. You don't need a real estate license. You don't need an LLC. You don't need to own multiple homes already. In fact, I work with people who purchase an investment property as their second home purchase all the time. Maybe they bought their first home a few years ago. They've built some equity. Their income has increased. Now they're ready to purchase a second property while keeping the first property they bought and turning it into a rental. Or maybe you've been saving specifically to purchase your first rental property. That's investing too. The most important thing is this: making sure that your current finances support purchasing an investment property. Now, if you're at a spot where you're like, okay, I can do this, I need you to subscribe and I need you to like this video, because the next video that's going to be coming out is exactly how to do it. The loan programs that are out there for you and how to make this happen. Because investment properties are a little riskier than financing primary residence, I'll stop right there and tell you how it's riskier. If you lose your job, what are you going to pay first? The house that covers your head or someone else's? Because of this, there are different requirements for investment properties that are given by the lenders. The 5 main things that you need to focus on is a higher credit score requirement, a larger down payment, slightly higher interest rate. Number 4 is higher reserve requirements. What is reserves? Reserves is money after you make the purchase. Essentially, think of it as your savings that you've got after the purchase is complete in the event that something happens. And number 5 that we see is additional documentation if you choose to use rental income that you've already told the IRS about. And this is why it is so important to start a conversation with a lender before you start browsing homes online. Because if you're browsing online, you may assume that you need anywhere between 30 and 40% down. That's just not true. You may qualify with much less depending on the loan program and your financial situation. While it is true, investment properties generally require a higher down payment than a primary residence, each person's financial situation, financial picture, and loan program go in to determine what that number looks like. Not a one-size-fits-all. So, is an investment property right for you? It's not necessarily the right move for everyone. But if you've been thinking long term about how you're going to build wealth for your future and your family, it's time to have a conversation. Or simply just owning another property in the future, let's chat. My favorite part of my job is helping you understand what is possible for you. Usually buyers come in thinking they have to wait years, they need tons of money, their credit must be perfect, they need no debt. And that's just not the case. And I'd hate for you to miss out on an opportunity today that's going to build you more wealth for the future. You don't have to be a millionaire to start investing in real estate. The minute that you purchase your first home, you're investing in real estate. And let us help you keep that investment and that wealth going. So I hope this is what you're hearing. I want to help you build wealth through real estate. Give us a call, send a DM, comment below, and we're happy to help you. I'm Nikki Rogers with Team Nikki Rogers here in Eastern North Carolina, serving all the states where we're licensing. Would you rather own one rental property or several over time? Let's find out together. Thanks for watching, and I'll see you next time when we dive into how to get it.